Can the Reserve Bank's Dr. Phil keep interest rates at these levels to 2024? Can the bond market cause a 10% correction of the stock market? And is this company seriously the next CSL? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, Paul, I've said it before, as George Costanza said, it's not a lie if you believe it. Dr. Phil thinks interest rates can stay this low to 2024.
Well, he keeps saying it, Peter, and I think he's now committed 3 times.
Yeah,
or more
double
than 3
down,
times,
triple down
on interest rates aren't going up. What's driving Dr. Phil? He wants wages growth. He wants wages growth of about 5% in order to get...
5?
Well, to get inflation at about above sort of 2, or let's say over 3%, because you get natural productivity growth, you need wages growth of almost 5%. So this is This is a big call when wages growth is about 1.5%, and that's what Dr. Phil is trying to do. Now, look, if he believes it, he believes it, Peter. But I reckon there's a long time between now and 2024 for him to become a non-believer.
Non-believer. And the bottom line is this. If we have to wait to 2024 to see inflation and wages good enough for him to start raising interest rates, this economy is going to be really comatose for a long time. And I do believe he thinks there's going to be an adjustment process when JobKeeper goes and government support goes. But my argument is I think the economy is strong enough to counter it or trump that. And I think we will start seeing interest rates rising somewhere late in 22 or maybe early 23, but not 24.
Well, in the meantime, at least, if let's say you're right and it's late 22, we've still got a year and a half of record ultra low interest rates.
Yep.
And in that environment, that just means ongoing support for equities. There'll be
He means stocks, in case you don't know. Equities are stocks.
There'll be dips, just as we saw a couple of weeks ago. But they're buyers because they can't go into TDs paying at 0.1 or 0.2%.
Yeah, TDs are term deposits, in case you don't know what he's talking about. Term deposits, yes.
Yeah. Okay. Well, just the fear of missing out, and the property market will keep people into equities, right? It's just the way the numbers work.
Okay. Let's go to our next topic. The bond market. Could it cause a 10% correction in the stock market?
Well, I think you should explain this, Peter. I mean, the bond yields have been going up. We're now at about 1.6%, 1.7% in Australia. They were below 1% for a while.
So it's a big jump in a percentage term, isn't it?
In a percentage terms, it is a big jump, and that's what's been causing some nerves in the US. And we've seen a little bit of rotation out of tech stocks. I think there are other reasons, but that's what it's been given. If the bond market keeps on rising, Peter, ultimately that'll be bad for equities. There's no doubt about that.
Stocks, he means.
Yeah, stocks, but... so yes, it could cause a 10% correction, but I think there's just too much money out there. I think we may have had the bit of the pullback. I mean, let's not forget, the US is at record highs again, right? I mean,
don't know what they're smoking over there, but it really has helped the stock market.
Yeah, that's with the pullback in the tech stocks. And we've seen, last night was again we saw another high before it just pulled off a little bit. Both in the Dow and the S&P 500. There's cooking over there, right? So, okay, sure. Bond market keeps going up. You'll get rates up for the US 10-year bonds at 1.6. If it goes up to, say, 2%, that would be scary, right? And we'll get a pullback in the equities, the share market. But, so he's half right. But I think we've already seen it, Pete.
So Kieran Davies from Coolbar Capital put this idea out. Because of the rise in stock prices, historical basis, we could see a correction. But I think Kieran, and I'm going to try and get him on the program, Investing Show on Thursday, to talk about this. I think the fact that interest rates are so low, that's the trade-off, isn't it? When stock prices are really high and interest rates are high, that's when you can see a sell-off of stocks. But when interest rates are so low, as you made the point earlier, there's nowhere else to go. If you want to try and get some money out of the wealth sectors, you're not going to get it out of term deposits, and house prices are going through the roof.
And bonds are going up in yield, higher yields, because of essentially concerns about supply. It's really a supply issue. There's just so much borrowing by our governments funding these massive stimulus programs. Now, if they get inflation concerns, legitimate inflation concerns, that's another story. But so far, there's no evidence. Just some higher commodity prices, but we need to get the wages growth up. And that's what Dr. Phil is all about, right? So, but he's saying, no chance
That's
until
right. And
2024.
he and the Fed, Paul, are going to fight the bond market. They're going to buy bonds and put money into the market. So it's a battle over the next year or two, bond market versus central banks.
And bear in mind, tonight, US time, that's Wednesday night, of course, the US Fed governor is speaking.
Yep.
The US Fed Reserve's meeting this next couple of days, speaks tomorrow to the market at 2 o'clock. They're going to hang on to every single word he says,
right.
but you've got to say, he'll be wanting to send a message that's good for markets, right? Yeah. He's not going to send something that's bearish.
Okay, last one. Could this company, Q-Biotics, be the next CSL?
Yeah, an interesting story about this because Q-Biotics, which is a Brisbane biotech company, Peter, it's been on the scene, I think, since 2004.
But not listed.
But not listed. Just attracted a very substantial investor in TDM. TDM's been a big investor in companies like Tyro, in the Guzman...
Guzman?
Yeah, you know the
Gomez and Guzman.
Gomez and Guzman, right? Yeah. And of course
Magellan has as well.
And Magellan, yeah. So and had a one of the most astute fund managers. Just attracted $50 million as an investment for a company that's making gross revenue of about $1.5 million last year. So it's a big call. It's a cancer company, look. They're quoted as saying, or at least one of the fund managers is quoted as saying, this could be the next CSL. So,
and didn't the journalists jump on that? And didn't I just jump on that? Not what we're talking about. But the problem is it's a biotech, and secondly, it's not listed. And when it does list, do you think that the share price will go through?
I don't know. Look, a lot happens with biotechs. It's a tough business, right? The reality is that most biotechs will fail, right? About 95% will fail. The odd one will invent something and survive, and that's what, of course, people are backing. So
I'm going to steal a Mark Twain quote here that he used for miners. He once said, a mine is a hole in the ground with a liar standing outside of it. I think a biotech company is a hole in your wallet with a liar standing out of it, and occasionally they're not lying and they come good.
So if they become the next CSL, you heard it here on this program first. Q-Biotics is the company, Queensland based. You can look it up on the website. Right. It's not listed, but it does have a way that you can access through an unlisted market share.
One to wait for when it is listed. I'm Peter Swetzer.
I'm Paul Rickard.
And we're mad about money.
Shh.